Hello, my dear students. Good morning to all. Welcome to today's online class. After today, means today our this third chapter will be over. So we can meet after our summer vacation, summer holidays. Okay, and in the summer holidays, I did not give any assignment. Okay, I did not give any project work and all. So you are free. That chapters which you already completed, fundamental, calculation of goodwill, and this admission of partnership. In that chapter, many illustration questions are there. I explained only practical questions only. So numerical questions that you have to, the answer is there. So it is easy to go through all the questions. So if a doubt is there, you please notice after summer vacation that we can clear. Otherwise, you can send that doubts through WhatsApp. If I am free, I will do that one. Okay, then welcome to today's class. Last day up to 84, not 8, up to 85 I explained. Now we are going to next question, 86. Okay, let us read the question and understand it. Amrita and Barkha are partners sharing profits in the ratio of 5:3. On 1st March 2017, they admit FISA as a new partner and the new ratio is agreed at 3:1:1. On this date, their books show workman compensation reserve of rupees 1,60,000. Partners do not want to alter the value of any item of balance sheet and want to record the effect of admission by passing an adjustment entry. You are required to pass adjustment entry under the following alternative cases. So they are telling that old ratio is given, new ratio is given. In the balance sheet, workman compensation reserve. This is an example of specific reserve. So this much amount is given in the balance sheet. Then we have to write one journal entry without altering the value of any item in the balance sheet. It means we cannot close this workman compensation reserve. Normally, workman compensation reserve we are closing at the time of admission. Okay, if any claim is there, we are showing the claim in the new balance sheet, and the remaining amount of workman compensation reserve we are transferring to old policy capital account. Here they are telling that do not want to alter the value of any item in the balance sheet means they do not want to distribute this balance amount. Then here the journal entry will be if profit is coming. Profit means in the workman compensation reserve some amount is remaining after the claim. Then it is a profit. Then entry will be new partner current account debited to sacrificing partner capital account. If a loss is coming, then opposite entry will come. Then sacrificing partner capital account debited to new partner current account. That will be the entry. So here when we are going for the solution, first of all we need to find out a sacrificing ratio. Okay. So when I calculate, I got a sacrificing ratio is coming 1:7. Then we can go through each conditions. In first condition, what will be the entry? When there is no claim for workman compensation. Okay, if there is no claim, then this much 1,60,000 profit is there, but we cannot close this this one because of this condition. Partners do not want to alter the value of the any item in the balance sheet. Because of that, this general reserve we are not closing. So in the future, the new partner will get the benefit of this much amount. That is why new partner's current account we are debiting now. Because in the future, his share we will credit it to his capital account. That is why. So the entry will be new partner's current account debit. That will be 1/5. 1/5 of 1,60,000 to old partner's capital account in sacrificing ratio. So 1/5 of 1,60,000 it is coming. That is coming 28,000. 1,60,000 divided by 5. Okay, 32,000 is coming. Okay, 32,000 is coming. Then 32,000 we have to distribute in 1:7. So 1:7 means total is 8. So this is divided by 8. Then 4,000. 1:7. So first partner will get 4,000. Second partner 4 into 7. 28. So entry will be new partner's current account debit. Okay, new partner's current account debit to old partner's capital account, and the amount will be 4,000 and 28,000 for old partner, and new partner's current account will be 32,000. 32,000 is coming 1,60,000 into 1 by 5. Okay, fine. Then second case, when claim for workman compensation is estimated at rupees 40,000. Here 40,000 claim is there. That is why reserve 1,60,000. So we have to take the difference to find out the profit. So from 1,60,000, 40,000 we have to use for the claim. Then the balance amount is 1,20,000. Now 1,20,000 divided by new partner's share is 1 by 5. So it is coming 24,000. So this much amount we can debit to new partner's current account. Okay, and credit will be this amount we are crediting to old partner's capital account in sacrificing ratio. So that is coming 3,000 and 21,000 is coming. Okay, 3,000 and 21,000 that we are crediting in old partner's capital account because sacrificing ratio is 1:7, and 24,000 this amount we are debiting to new partner's current accounts. Now third case, when claim for workman compensation is estimated to 1,60,000. So here 1,60,000 reserve is there, and the claim is equal to that amount. 1,60,000 is given. So here there is no profit, there is no loss. That is why no journal entry. No need of writing any journal entry. Okay. Then fourth case, when claim for workman compensation is estimated 3 lakh, and here reserve is 1,20,000 only, and the claim that is coming 3 lakh. So how much amount? 1,40,000 is coming. It is not a profit. It is a loss. That you understood, no? 1,60,000 reserve is there. From that reserve, we have to create a 3 lakh rupees workman compensation claim. So this is not enough. That is why we have to debit a revaluation account actually. Okay. So because of this, loss is coming. How much? 1,40,000. Then if a loss is coming, entry will be reverse entry of if a profit is coming. So here the entry will be old partner's capital account debited to new partner's current account. That is entry. Now amount will be 1,40,000. 1,40,000 divided by 5. New partner's share is 1 by 5. So 28,000. So here 28,000 is a credit to the new partner, and his current account we have to credit, and other partners this amount they have to distribute in 1:7. So this answer is coming. Okay, fine. Then we can go to 86 is over. 87. See, A and B are partners sharing profits and losses in the ratio of 3:2. They admit C as a new partner from 1st April 2017. A surrenders 1/3 of his share and B surrenders 1/5 from his share in favor of C. Following balances appeared in their balance sheet as at that date. Here investment is given, investment purchase reserve is there, and the market value is given here. Okay, so we have to compare, and then we can continue that remaining part of the question. Partners decided that book value of any item in the balance sheet is not to be altered, but prefer to record the change in profit sharing ratio by an adjustment entry. Show the adjustment entry under the following alternative cases. Then regarding the new ratio and the sacrificing ratio, listen this one. Here A surrenders 1/3 of his share. So A's surrender will be, A's share is 3/5. So 3/5 into 1/5. That will be A's sacrifice. And B's sacrifice will be from his share, not of is given. So 1/5 only his sacrifice. A's sacrifice is not 1/3. 1/3 into 3/5. That is A's sacrifice. B's sacrifice is 1/5 only. So you have to find out the here sacrifice ratio we need to find out. Okay, firstly calculate new ratio. Otherwise 1/3 into 1/5 how much? Sorry, 1/3 into 3/5 how much? It is coming 1/5. Okay, so A sacrifices this much. and B sacrifice 1 by 5. So both the place denominators are 5 only. That is why we can write sacrifice ratio is 1:1 is coming. Then we can go to the journal entry. Then here investment is given 4,50,000. Then here, if there is no other information, it means the value of investment will be the same amount. Value of investment will be 4,50,000 itself. Then this amount, this will be profit. Then this specific reserve will be, the full amount will be profit. Now the journal entry will be new partner's current account debited to old partner's capital account. Then new partner's current account we have to debit with his share. His share is then new partner is getting how much? A giving 1 by 5, B also giving 1 by 5. So his share is 2 by 5 is his share, right? 2 by 5 is new partner's share. Then 2 by 5 of this 60,000. That is coming 12 plus 12, 24,000 is coming. Okay. So C's current account is debited with 24,000 and A and B, that is 12,000 each, because sacrifice ratio is equal 1:1. So first case you understood. This way we are thinking there is no other information, means the value of investment will be this only. So the full amount will be profit. 60,000 rupees of profit is there. Normally this amount we are transferring to old partner's capital account in old ratio. But here it is saying that partners decide that book value of any item in the balance sheet is not to be altered. Because of this sentence, we cannot use this account for journal entry. In the journal entry, we cannot write investment purchase reserve account debit. That we cannot write. Instead of that through capital we are adjusting that amount. So that is why that entry is coming. Now second case, if the market value of investment is 4,35,000, here 4,50,000, 4,35,000 means how much decrease is coming? 15,000 value is decreasing. Then this 15 we have to subtract from this 60,000. 60,000 minus 15, 45. 45 is a profit now. Yes, this 45 is a profit. Then the journal entry will be like the previous case only. We have to debit C's current account and we have to credit A's capital account and B's capital account. And C's amount will be this amount into 2 by 5. Okay, that is coming 18,000. We can check it. 45,000. 45,000. His share is 2 by 5 into 2 divided by 5. So 18,000 is coming. That is why here in the answer also it is given 18,000. C is a current account debit 18,000 and A and B they are crediting in sacrificing ratio, that is 9,000 equally. Now third case, if the market value of investment is 3,50,000, here 4,50,000 and here 3,50,000 means how much value is decreasing? 1,00,000 rupees is decreasing. And here how much reserve is there? 40,000. This is not enough. So here 40,000 rupees loss is there. Here it was a profit. Previous case it was a profit. But this is a loss. If a loss is coming, entry will be reversed. Reverse means new partner's current account we have to credit. And old partner's capital account we have to debit in sacrificing ratio. So 40,000 his share will be 40,000 into 2 by 5. It will come 16,000. Okay, 16,000 is coming and the entry will be A's capital account debit, B's capital account debited to C's capital account. Okay, the same answer we are getting. Now fourth case, if the market value of investment is 5 lakh, here 4,50,000, here 5 lakh, this is the new value. So when the value of investment is increasing, here 50,000 rupees of profit is there. From this one 50,000 rupees of profit is there. Then this reserve 60,000, that is a full profit. This also profit because this is a specific reserve and when the value of investment is increasing, this from this we are not taking any money. So the full amount will be profit. So the total profit in this case will be this much. That is coming 1,10,000 is coming. Okay, then 1,10,000 profit is coming. Then entry will be new partner's current account debited to old partner's capital accounts. That is why this into 2 by 5. So 1,10,000 into 2 divided by 5. the amount is coming for 44,000, and 44,000 is debited here, and that is equally 22 that is coming to this other old partner's capital account. Okay, we are moving to next question, that is question number 88. See, A, B and C are partners sharing profits and losses in the ratio of 9:6:5. Their balance sheet as at 31st March 2018 was as follows. Here creditors, profit loss accounts, general reserve, investment purchase reserve, workman commission reserve, then capital account of 3 partners. Then asset side, land and building, investment stock, sundry debtors, cash at bank, advertisement, suspense account. Here investment is there, and here investment fluctuation reserve is there. In this, these all are the, okay, this is a accumulated profit, this also accumulated profit, this two are the specific reserve, and this is accumulated loss, this one. Now D is admitted as a new partner for 1/4 of the future profits and losses. B sacrificed 1/10 from his share in favor of D, and rest of the sacrifice was made by A and C in the ratio of 2:1. Claim on account of workman compensation is estimated at rupees 50,000. Market value of investment was 1,25,000. Partners do not want to alter the value of given in the balance sheet. The value is given in the balance sheet, but prefer to record the effect of change in profit sharing ratio by an adjusting entry. You are required to give the necessary journal entry. Also calculate a new profit sharing ratio. Okay, so here investment, this is okay. Investment value is given for the specific reserve. To find out the profit or loss, this amount we can use, and this one workman compensation claim also given 50,000, so that also we can adjust. Okay, so 2 specific reserve, 2 amount also given there. Then do one thing, can you calculate the new ratio from this information? D is admitted as a new partner for 1/4 of his share. This is a new partner share 1/4. Then how he is getting this 1/4 from the other partners? B sacrifices 1/10 from his share in favor of D, and the rest of the sacrifice was made by A and C in the ratio of 2:1. Okay, this much only given. So you do one thing, you can pause the video, and you can spend near about 5 minutes, maximum 5 minutes you can spend, and can you find out the new ratio? Okay, then now you can listen how to find out. New partner's share is given, that is 1/4, and 1/10 from his share. Who is giving? B sacrifices 1/10 from his share. So this much B is giving 1/10, and this new partner share is 1/4. In the 1/4 he is getting 1/10 from B. This he is getting from B. So he need now this much amount more, this much profit he need more, because 1/4 minus 1/10 we are getting, after this calculation we are getting 6/40 we are getting. Okay, then 6/40 he is required from B, he is getting 1/10, then balance is 6/40 is there to get 1/4. Then question is saying that this he is getting, this 6/40 he is getting from other two partner name is A. So from A and C he is getting in which proportion? It is in 2:1 proportion. Okay, then in 2:1 proportion, then from A how much he is getting? From A he is getting this 6/40 into 2/3, and from C he is getting 6/40 into this 1/3. So 4/40 is coming, and here 2/40 is coming. Okay, 2/40. Then This we can reduce 4 by 40, 2 by 40. So this we can write 1 by 20. This we can write 2 by 20. Then 1 by 10 he is getting from B. So from B he is getting 1 by 10. 1 by 10 we can make out of 20. So that will be 2 by 20. Okay. So this much from A is getting this much, from B he is getting this much, and from C is getting this much. So sacrificing ratio will be all the denominators are same. Okay. How much they are giving, that is their sacrifice. So A is 2 and B is 2 and C is 1. So this is the sacrificing ratio. Then to find out the new ratio, how much A is giving, that we can subtract. So first of all, what was the old ratio? Old ratio was 9:6:5. 9:6:5. Then A is new share. A is new share, that will be A is old share is 9 upon 20. Then how much A is giving? A is giving 2 by 20. So 7 upon 20 is coming. Then B is a new share. B's old share is 6 upon 20. He is giving BB, this one. Okay, 2 by 20. It is coming 4 upon 20. Then C's share. C's share, that is C's old share is 5 upon 20 minus C is giving 1 by 20. So his share is 4 by 20. Now new partner is D. D's share, it is given 1 by 4. 1 by 4 we have to make out of 20. So we have to multiply with 5. So 5 upon 20. So new ratio we are getting 7:4:4:5. This is the new ratio. Okay, it is correct. 7:4:4:5. Then sacrifice ratio also we got 2:2:1. Then that calculation of new ratio and sacrifice ratio, that is over. Now we can think about the journal entry. Then for the journal entry, first of all we have to find out the profit to be adjusted, or the amount to be adjusted we have to find out. First of all you have to make one table like that. One heading you can write amount to be adjusted. One heading you have to write. Okay, amount to be adjusted. Then firstly profit loss account, amount is 15,000. You see the question. Then next general reserve, that is also 1,20,000 is given. Next item is investment fluctuation reserve. Here the amount is 45. Then investment given in the balance sheet 1,50,000. Now see here what is the value of investment. Market value investment is 1,25,000. 1,25,000 and here 1,50,000. So how much loss is there? 25,000 rupees loss is there. That 25,000 you understood now. So from here that 25,000 we have to subtract, because this loss we have to adjust from the reserve. That is the purpose of investment fluctuation. Fluctuation means the value is changing. So investment value when it is changing, for that purpose we created one reserve. For keeping that for adjusting that loss we created one reserve, that is the investment fluctuation reserve. So 45,000 minus 25,000, balance will be the profit. It is coming 20,000. Now workman compensation reserve is there. Workman compensation reserve in the balance sheet it is given 80,000. Then Here what is given? Claim on account of workman compensation is estimated at 50. So 50 claim we have to keep. Then also some balance is there. That will be 30,000. So from the liability side, 4 items we took. Now in the asset side, 1 item is given, advertisement suspense. This you have to subtract because it is a loss now. Other things are profit. So advertisement suspense, the amount is 25,000. The amount which is put in the bracket will be subtracting. Now this will be 15,000, 1,20,000, 20,000, 30,000 minus this is 25. 1,60,000 we are getting. Now this 1,60,000 is a credit balance or debit balance. Profit was more, so this will be credit balance, okay? Or we can write a profit. If a profit is there, the journal entry will be new partner is a current account debit and sacrifice and partner is a capital account is crediting. If opposite, if a loss is there, entry will be opposite. It means old partner is a capital account debit in sacrifice ratio and we have to credit new partner is a current account. So here we got to 1,60,000. Then new partner is a share. New partner is share. This is this into 1/4 no? New partner share. So 1,60,000 divided by 4, we are getting 40,000. Okay. Then journal entry will be new partner is D is a current account debit 40,000. We can see the okay. D is a current account debit 40,000. Then in sacrifice ratio, this is a creditors. Okay, that is the answer of this question. Question number 88. If any doubt is there, this much you see once again. Okay. Then question number 89. Okay, listen to that question 89. A and B are partners sharing profits in the ratio of 7:5. Their balance sheet as at 31st December 2017 was as follows. Sundry creditors 75,000, general reserve 1,50,000, workman compensation reserve 40, investment fluctuation reserve 35,000, capital account of A and B. Then building, stock, investment, this and market value is 90,000, sundry debtor 1,50,000, provision for doubtful debtor 15,000, cash at bank 1,45,000, advertisement expenditure 40,000. Like a previous question, almost all the items are there. Previous question 1 profit loss account was there extra. Okay, here the same items only there. Now they admit C as a partner. A sacrifice 1/7 of his share and B sacrifice 1/6 from his share in favor of C. Following terms are agreed upon. What about this one? A sacrifice 1/7 of his share and B sacrifice 1/6 from his share. So this is B's sacrifice and A's sacrifice you have to multiply with A's old share into 1/7. That will be A's sacrifice. So read the question clearly. It is off is given here, no offer. Okay. Following terms are agreed upon. Goodwill is valued at 2,40,000. C brings 2 lakh as a capital and his share of goodwill in cash. Ravi, an old customer whose account was written off as a badge, has promised to pay 12,000 in full settlement of his account of 15,000. Can you think about this adjustment? It is a new for you. Read once again and can you guess what will be the treatment of that item? Ravi, an old customer whose account was written off as bad, has promised to pay 12,000 in full settlement of his account of 15,000. Last year, his account was written off as bad debt, then the amount was 15,000. Now this year, he agreed to pay 12,000 in the place of 15,000. That is the question. So can you guess what will be the treatment? You can, if you want to think, you pause the video, take your time. Okay, I am telling the answer. So here 2 amount is given. We don't want this amount. Okay, how much amount we are going to receive? 12,000. 12,000 only we need. Then how we will record this 12,000? This 12,000 old customer means he was a debtor. So this amount we are adding to debtor. Okay, so how we are adding? This we have to make it through revaluation account. In the revaluation account, credit side this 12,000 is coming, and balance sheet this 12,000 will be added to debtors. Clear? 15,000 no treatment, because how much we are going to receive, that only we have to consider. Provision for doubtful debt to be reduced by 10,000. This is the item going to revaluation account. Provision for doubtful debt reduced by 10. Here how much? 15. And here 10. We have to reduce by 10. So that much. So provision is decreasing. Now liability is decreasing, will be gain. Then this 10,000 we have to take on the credit side of the revaluation account. So this is coming in the revaluation account, and this also coming in the revaluation account. Now claim on account of workman compensation is 25,000, and here 40 workman compensation. Okay, so then stock is overvalued by 20%. Overvalued. That is why to get the correct amount, stock divided by one day I told how to calculate. So overvalued. So we have to divide by 1.2. Okay. And building is undervalued by 25. 100 minus 25, 75 is coming. With 0.75 we can divide. Then when we are dividing by 1.2, we are getting the correct value. Okay. Then compare, difference only you have to take. Overvalued means this value became more. So value we are decreasing actually. So after dividing with 1 by 2 that amount, then you take the difference. Difference is coming on the debit side of profit loss account. And here this amount building you divide by 0.75, then we are getting a amount more than 6 lakh. Then from that amount deduct this is 6 lakh. And undervalued means we have to increase the value. So that much profit is there. That profit you can take on the credit side of the revaluation accounts. Then after adjusting the claim of workman compensation from workman compensation reserve and the difference between book value and market value of investment from investment fluctuation reserve, remaining balance of such a reserve along with all accumulated profits and losses are to appear the balance sheet of the new firm. The simple meaning is they do not want to close this general reserve, advertisement suspense accounts, and specific reserve, that contingency reserve is there, this one, workman compensation reserve. They want to how much profit is there, that they want to show in the new balance sheet. They do not want to distribute it. Okay, but the claim we have to take in the balance sheet. Here claim amount is given. That claim we want to take in the balance sheet, but after taking the claim some profit is there. That profit we do not want to distribute it. That profit we have to keep in the new balance sheet also. Like a investment fluctuation reserve also. We have to make the investment in new value. New value we will make. After that, how much balance is there in the investment fluctuation reserve, that we have to show in the balance sheet. Okay, we are not distributing. That is the meaning of this one. So how much last question we made one table now, this one. Like that we have to find out what is the net amount we have to adjust. Then for that we are passing the journal entry, and this profit loss account, general reserve, all the amount, the previous amount only coming in the new balance sheet, except workman compensation reserve and investment fluctuation reserve. That amount, this will come, workman compensation reserve will come after subtracting that claim. Investment fluctuation reserve will come after subtracting that changes in the value of that investment we will subtract, then balance amount is coming in the new balance sheet. Then what is asking here? Prepare revaluation accounts, partners capital accounts, and reconstituted balance sheet. So here that revaluation account I told what are the items coming on the debit side and credit side. That is why I am not going to make that one, but a capital account I will show you that I already made. I will explain also. Okay, so that one. Yes, so revaluation account you have to make. So this is the question 89. Revaluation account you need to make, and you have to find out the sacrifice ratio. Sacrifice ratio when I calculated I got 1:2. Okay, then in the capital account I am telling, first of all this is the balance, and this is the new partner is brought this much money as the capital, and his share of premium is coming 60,000, that is distributed in this ratio. In this ratio that is distributed. Then revaluation account when we are making, we will get 1 lakh 2 lakh I think. Okay, no, 1,92,000 profit we are getting. Then this one, that the total amount, the net amount to be adjusted for general reserve, investment registration reserve, advertisement suspense, then workman commission reserve. It's a net amount. His share is coming this much. Okay, that amount's calculation is given in the book here in the working note. It is given. You see, adjustment to be made for accumulated profit and losses. General reserve, the amount is written same way. Workman commission reserve, claim is subtracted, then it is coming 15. Investment registration reserve also, that changes in the investment is subtracted, then it is coming 25. And advertisement suspense is given in the asset side, that will be subtracted, then net amount is 1,50,000. Then 1,50,000 into new partner's share, that is coming 37,500. In the sacrifice ratio we are distributing, that is 1:2. That is why this is the you can see in the capital account. Okay, 12,500 and 25,000. Then take the total, and here that the total will come, and this is the balance is coming. Fine. Now we can go to the balance sheet, opening balance sheet. See, first of all, building value is increasing, that increased value is 8 lakh. Stock value is decreasing, that is taken there. Investments, that is 90, no changes. Debtors we added 12,000 and we subtracted that provision is $5,000 required. So this is coming 1,57,000 is coming. Cash at the bank, this is the old balance sheet, this is the amount, and this is the new partner brought his capital. This is his share of premium. Advertisement expenditure will come, that is 40,000, because we did not close it. Okay, we want to show this in the new balance sheet, that is why, and accordingly only we passed this journal entry. Then now in the liability side, sundry creditors no changes. General reserves, what is the old balance sheet amount, the same return. Workman commission reserve, after adjusting this 25,000, 15,000 is there. Claim for workman compensation, after adjusting that amount, claim for, it is not, it is a claim, okay, not a reserve. Claim for workman compensation, 25,000 is the liability. This liability we took, and here that investment amount we take the new value. Okay, investment value we took the new value, not the old one. You see, in the old balance sheet the value is, investment is 1 lakh, but we are taking new value. New value is 90. So that is 10,000 loss we adjusted from this one. That is why investment will come, reserve will come 25,000 in the balance sheet. You see, investment fluctuation reserve 25,000. Then claim is a liability, we have to take it here. Then capital account ABC, this amount we are taking. Then all the items we took, but one more item is coming this side. Okay, one more item is coming this side. Can you guess what will be that? If you listen the question very carefully, then you can get what will be that item. Okay, I am not telling. Anyway, this side total you take, we will get the correct amount of answer is given in the balance sheet total. You will get that, and here one amount is there. You find out what will be that. Okay, fine. Now we can move to next question, question number 90. This is the last question we are saying from this chapter. Okay, P and Q are partners sharing profits in the ratio of 3:2. Following is their balance sheet as at 31st March 2017. creditors, general reserve, workman compensation reserve, investment frustration reserve, capital of P and Q, land and building, stock, investment, market value also given, debtors less provision, cash at a bank, advertisement, suspense. On 1st April 2017, they agreed to take R as a partner on the following terms. P sacrificed 1/4 of his share and Q sacrificed 1/20 from his share in favor of R. This is Q's sacrifice and P's sacrifice will be 1/4 into his share. That much will be his sacrifice. Goodwill of the firm is valued at 2 lakh. C brings 2,50,000 as a capital but brings only 60% of his share of goodwill in cash. C's share of goodwill, first of all, C's share we have to find out. In the question it is not given what is C's share. Okay, you need to find out new ratio, you have to find out, and it will come. P sacrifice 1/4. Okay, it is not given. So when you are calculating here, the answer is given. It is given 9:7:4 is given. This okay. So 4 upon 20. That is the 4 upon 20 will be 1/5. No? Okay, 1/5. So 1/5 of this goodwill is 2 lakh is given. Goodwill of the firm is 2 lakh. 2 lakh divided by 1/5. So his share of goodwill is coming 20,000. Then he is able to bring only 60%. So 40,000 is his share of goodwill. It's a 60% means 24,000 he is bringing. So this is a premium for goodwill, like that we have to treat. Then remaining amount, it is a 60%. Remaining amount is 16,000. For this you need to adjust current account. Okay. Then land and building is overvalued by 50,000. Overvalued, undervalued. So we have to increase this much amount. Stock is overvalued by 40. Stock value we have to reduce. So it will come in the debit side of revaluation account. Claim on account of workman compensation is 40,000. And here claim is given workman compensation reserve. Here it is a 25. And here it is a 40. So more we have to find out. This reserve what is given, that is not sufficient. This is more. Claim is more. So the extra money is coming. We have to take it from the revaluation account. Revaluation account we need to debit it. There is an unrecorded asset worth rupees 30,000. So it will come in the revaluation account credit side. New balance sheet also this will come in asset side. Provision for doubtful debt be reduced to 20,000. Okay, provision for doubtful debt be reduced to 20,000 here, and here how much it is given? Here 30,000. So which amount? How much amount we have to take in the revaluation account? And what will be the result? It means it is a profit or loss. Think about that. Here provision is given 30, and here it is saying that this provision for doubtful debt. Provision for doubtful debt reduced to 20. So what amount we will take in the revaluation account, and where we will take it? Debit side or credit side? The amount we have to take is 10,000. Okay, 10,000, that much amount is decreasing. 10,000 is the amount we have to take, and it is coming on the credit side of the revaluation accounts. Then 7th point, expenses debited in profit loss account includes a sum of 25,000 paid for P's personal life insurance policy. This is the last year in the profit loss account 25,000 is taken as one expenses. Okay, but that 25,000 is paid for life insurance policy of partner P. Then when they are taken this amount 25,000 in the last year's profit loss account became that gave less profit. Okay, now only they find out that this 25,000 is actually a personal expense of partner P. So how we can treat this one? This way. This is 25,000. Then last year profit became less 25,000. Now we can increase the profit. For increasing the profit, we can use a revaluation account. So this will come in revaluation account credit side 25,000. Then what we will write there? In the revaluation account credit side, what we can write? We can write P's capital account. Okay. So the journal entry will be P's capital account debited to revaluation account. The amount is 25,000. Now next, general reserve is to appear at its original figure in the balance sheet of new firm. Once again listen. General reserve is to appear at its original figure in the balance sheet of new firm. And it is not saying about some other items also there. Workman commission reserve, investment registration reserve, advertisement suspense. This much items, question is not saying anything. They are telling about general reserve only. General reserve is to appear. Means general reserve only they want to show in the new balance sheet. Other items we can close. That is the previously we studied. Okay. Now the entry for general reserve is, if a general reserve we want to show in the new balance sheet, its journal entry will be new partner's current account debited to old partner's capital account. That is for only general reserve. And other account is there, workman commission reserve, investment fluctuation reserve, advertisement suspense. This all we are closing by using that account. Okay. That we studied earlier. After the revaluations, immediately we studied how to treat the accumulated profit and losses and specific reserve. How we are treating in the same way, these items we have to treat advertisement suspense, investment fluctuation reserve, workman commission reserve, we have to treat in that way. But general reserve, we want to show in the new balance sheet. That is why we are not distributing. So the entry will be new partner's current account debited to old partner's capital account. That is for general reserve. And when we are making new balance sheet, general reserve only coming in the liability side. Other items will not come. Compensation reserve will not come. Fluctuation reserve will not come. And investment we have to take in the correct figure. Then advertisement suspense will not come in the new balance sheet. Okay. That all we have to transfer. And here the journal entry is given there. So this will be homework. Okay. Fine. So we completed our third chapter also. Then in the summer vacation time, I did not give any summer assignment or a project work. I did not give. So you can revise all these 3 chapters. Okay, one by one. Take your time. Okay. Then enjoy your holidays by doing or by studying our subjects. Okay. Thank you.